Heya Cryptozens. Tonight's show. European Central Bank recommends mining ban and stablecoin regulations. Ethereum merge date. Putin bans digital asset payments. It's 10 p.m. Pacific time. The date is July 17th, 2022. Welcome back to the Crypto Overnighter. My name is Nicodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex. And together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. So take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night so that when you leave in the morning, you're taking with you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. So the European Central Bank put out a study on crypto, and it takes a look at the level of financial risk things like stablecoins and DeFi bring, as well as any potential harm to the planet. It's called a deep dive into crypto financial risks, stablecoins, DeFi, and climate transition risk. And this report does a number of things. It takes a hard look at the risks and policy implications of different areas of the digital asset space. One of these areas are stablecoins. While they recognize the innovation and increasing use cases stablecoins bring, they're also recommending, quote, appropriate regulatory, supervisory, and oversight frameworks before significant further interconnectedness with the traditional financial system occurs. Now, DeFi was also a topic for discussion in the paper, and their belief is that being decentralized can be a problem. They're concerned that providing financial services without relying on centralized institutions like banks invites financial stability risks and regulatory challenges. And as many governments and organizations are doing, they took a look at climate change and the effect of potential climate transition risks to the European financial sector. They're concerned about, quote, the significant carbon footprint of certain crypto assets like Bitcoin, and proposes potential measures that can be taken by authorities. Now, a lot of this report is central bankers being central bankers doing central banker things, claiming things like crypto assets will pose risks to financial stability. Now, I'm convinced that these people, when they say things like this, they're really talking about themselves. They're really worried about the use of crypto assets, what that means for the central bank model. They don't want their job to go away, and I don't think it will anyway. That said, many people feel better when they know someone is in charge, someone they can hold responsible when bad things happen. Even if we know that they're just going to shove the blame off onto someone else, we like to have somebody we can point to and say it's your fault. Now, one thing that we have to talk about here is a probable ban on proof-of-work mining. The ECB has been trying to get a ban on Bitcoin and other proof-of-work mined cryptocurrency for a while. Remember, earlier this year there was MiCA, the Markets in Crypto Assets Framework, and that was a sweeping set of policies and regulations for crypto. In that framework was a ban on Bitcoin and any other crypto produced by proof-of-work mining. And for a long time, it looked like that ban was going to get through. In the end, it was in fact pulled from the final legislation. Well, they're at it again. And folks, I don't think that they're going to stop, because the ECB pretty much says that they're not going to let go. They said, quote, so while a hands-off approach by public authorities is possible, it is highly unlikely, and policy action by authorities, for example, disclosure requirements, carbon tax on crypto holdings, or outright bans on mining, is probable. They called proof of work the equivalent of a gas-driven car, and proof of stake the equivalent of an electric car. They said, quote, public authorities have the choice of incentivizing the crypto version of the electric vehicle, proof of stake and its various blockchain consensus mechanisms, or restrict or ban the crypto version of the fossil fuel car, proof of work blockchain consensus mechanisms. And they took a shot at DeFi too, because after complaining that the problem with DeFi was that it wasn't decentralized, they're saying it's not decentralized, that governance is consolidated for DeFi protocols. They said, quote, for instance, 80% of the supply in circulation of Uniswap's governance token is held by the team, early investors, and token holders with a balance of over 1 million. Further, 1% of the total token holder addresses hold around 97% of the total token supply. And of course, stablecoins came up. And they're kind of going with what's becoming the new normal. They see asset-backed stablecoins as being good, but not so with the algorithmic stablecoins. They say algorithmic stablecoins, quote, should be treated as unbacked crypto assets. And they want regulation of stablecoins specifically because of what happened to Terra's UST algo stablecoin. That's not going to happen soon, though. The newest package has things like proof of work bans and stablecoins regulations. Their newest package has a target date of 2025, so we've got some time. At the time of writing, the global crypto market cap is $957 billion. That's down 1.19% in 24. The top 5 cryptos by market cap are Bitcoin down 1.72%, Ethereum down 0.81%, Tether, USDC, and Binance Coin up 0.02%. I've heard a number of people say that the Ethereum merger will never happen. Jokingly or half-jokingly, they point to delay after delay as proof that the end will never come. Well, the end has a date now. A specific deadline from the transition for proof of work to proof of stake. And this isn't some weird market speculation. It's not something crypto Twitter cooked up. It comes right from the team of developers who are implementing the merge, a merge which has been taking years. The Beacon chain was launched in December of 2020, and there have been a few delays along the way. But as it stands, it's nearing a crucial point in the development of Ethereum as a digital currency, because this merge takes Ethereum from being a proof-of-work mining consensus, which is seen as environmentally destructive, to proof of stake, which is considered to be much more green-friendly. And so it came to pass that the devs were on a conference call. Now, Tim Biko was on that call. He's a core Ethereum developer. Now, he proposed a date of September 19th. That would be the target date for the merger. His proposal met no objection or pushback from the rest of the core developers. And it's important to note that this should be seen as a planned date. This isn't a hard, set-in-stone thing, because the system is still being tested as they work on it. Earlier this year, back in June, the Sepolia testnet beacon chain went live. And so they used that as a practice run to get the technical insights from results. That merger happened on July 7th. The Gurley network will be the scene for the next trial to see if the merge is ready or not. That's slated to happen in late August. If all of that goes through, it's all hands on deck getting this merge done in the second half of September. All that said, don't look at this as Ethereum 2.0. For one thing, there won't be a 2.0. It's going to be the same Ethereum that we have now. It's just that the rules change. And the biggest rule, the biggest change, the one I see being most important to the long-term health of Ethereum, it's not the beacon chain merge, because most people won't see a big difference in that. But the sharding, the plan has merit to make ETH more scalable and push their transaction volume to be on par with centralized payment systems. That said, I expect at least a temporary boost in Ethereum's price just on the feel-good vibes with a more ecologically sustainable consensus model. And they will have removed one of the more damaging narratives against Ethereum. That can't be anything but good in today's political climate. The global NFT sales volume is down 2.69% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are CryptoPunks, followed by Otherdeed, Bored Apes, Mutant Apes, and The Americans. Now, keep in mind, some of these collections have very volatile prices, so do your own research. Okay, so the president of Russia, Vladimir Putin, he signed a bill banning the use of cryptocurrency and related digital assets as payment. You can't use them for payments, you can't use them for money. Now, this bill had been introduced in the lower chamber of parliament over a month ago, and it had been waiting ever since. And so it came to pass that the Russian State Duma reported that Putin signed a bill. This bill suspends parts of existing federal law, and those parts cover, quote, on banks and banking activities. And what it really does is it makes illegal to use cryptocurrency as a form of payment for goods and services. In the original draft, introduced in June 7th, it included language around the ban, and it called for the, quote, prohibition against the introduction of other monetary units or monetary surrogates on the territory of the Russian Federation. Typical central banker stuff, of course. Well, that draft got approved the next day, on June 8th. The upper chamber of Parliament, the Federation Council, approved the bill exactly 1 month later, on July 8th. Now, kind of like how the system in the U.S. works, in Russia, both chambers of Parliament have to approve a bill before it goes to the president for signature or not. So the Russians have this concept called an electronic platform, and it's basically how financial assets get injected into the system, whether that's a financial platform, an investment platform, whatever. It's the way new digital financial assets get issued. So this new law makes it likely that these platforms report back to Russia's central bank. They'll probably have to hand over the transactional data as part of the national payments system. Now, this is a little schizophrenic to my mind because less than a month ago, the Duma passed a bill on crypto taxes. They changed the tax code so that selling crypto isn't a taxable event, at least not as far as the value-added tax goes. Crypto is effectively made tax-free. They also set the income rates on crypto exchanges. 13% for the first 5 million rubles, taxed annually. 15% for amounts above that, and 15% for foreign exchanges. Now, right now, the tax rate for those companies is 20%. That's a huge drop. And that move makes sense to me. Russia is a virtual pariah state among nations. They've been under major Western economic sanctions since its illegal invasion of Ukraine. Beyond that, the G7 countries banned newly mined or refined Russian gold. So it makes more sense to me that Russia would drop all taxes for wealth coming into the country. Seems like they could use the capital. But again, schizophrenic, because Russia's Sberbank is preparing to launch a stablecoin. In the meantime, the Russian central bank pushed up their trials for a CDBC from 2024 to April of next year. So I'm not sure that they really know what they're doing. And I'm a little torn about Russia choosing to cut off from the rest of the world financially. Because while I absolutely hate what Putin is doing, these economic sanctions and measures will hurt his citizens far more than anything that he'll have to face. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I'll stop talking. You stay safe out there. Watch out for yourselves, but watch out for each other too. We'll see you tomorrow night.